what if nature had a price tag? I don't just mean, for the timber we harvest or the minerals we mine, but for the very essence of its existence. Think about clean air, fresh water, a stable climate, that incredible tapestry of biodiversity. Today, we're taking a deep dive into a concept that's, well, it's both fascinating and pretty controversial: the financialization of nature.
Right. And our mission here is really to unpack what it actually means when natural assets and those essential services ecosystems provide get transformed into financial instruments. We'll explore the mechanisms driving this trend. Some are quite sophisticated, maybe even a bit opaque. And we'll critically examine the real-world implications. Everything from environmental effectiveness or lack thereof to socioeconomic consequences. We'll even look at potential solutions. We've gathered insights from academic critiques, big environmental organizations, and public debate to give you a really comprehensive picture.
Okay, so this whole idea of financialization,
Right.
it's huge in economics, right?
Yeah.
But what happens when you turn that lens onto nature itself, something so fundamental?
Well, let's start with the bigger picture. What is financialization? Our sources describe it as this increasing dominance of financial markets, financial motives, institutions, elites across the whole economy.
Yeah, you can think back to the lead up to the 2008 crisis, maybe, where deregulation was seen as paving the way for instability through these innovative financial instruments and the whole shadow banking thing.
Exactly. And what's fascinating, or maybe concerning, is how this phenomenon, which maybe started with shifts in the economy, this search for new investment opportunities, has just expanded its reach. It's moved way beyond just finance itself to cover almost everything: pollution rights, future risks, you name it. And it's not just the financial sector getting bigger, it's industry getting deeply involved in finance. And even us, individuals through our pension funds, we're all increasingly tied into this logic.
So, okay, if we take that abstract financial logic and apply it to something as real, sometimes even sacred, as nature, what does that actually look like? How does it play out on the ground?
Well, the research shows it translates into creating financial assets out of things like greenhouse gas emissions, carbon credits, offsets, that kind of thing. But also biodiversity, specific species, wetlands, whole ecosystems.
So you're literally putting a price tag on them.
In essence, yes, assigning a quantifiable economic value. And that converts nature into something that can be, bought, sold, traded on a market. And this fundamentally shifts how we approach environmental governance. It's a big change.
How so?
Instead of relying only on traditional government regulation or international treaties, we're seeing this really distinct move towards market-based instruments. Nature gets reframed as natural capital, valued mostly for its economic benefit.
Right, natural capital.
And what's also crucial here, and maybe a bit subtle, is how international environmental agreements get framed. They increasingly talk in relative terms. Think net zero or neutrality, rather than demanding absolute cuts in emissions or, say, a complete stop to biodiversity loss.
Okay, let's dive into some of these innovative financial instruments then. The concept of cap and trade that comes up a lot. How does that actually work?
Right, cap and trade, it's typically used for regulating emissions. So you set an upper limit, the cap, on the total amount of a pollutant, maybe sulfur dioxide or greenhouse gases, allowed in a region.
Okay, a limit.
Then economic actors, companies usually, get issued permits to pollute up to that limit. And these permits can be traded. The underlying idea, at least from mainstream economics, is that this achieves environmental targets cost effectively. It supposedly internalizes the social cost of pollution through the market's price mechanism.
And we've seen this before.
Oh, yeah. There were early examples like the U.S. sulfur dioxide trading system back in the 90s, which many point to as a success. And then on a larger scale, emissions trading really took off under the Kyoto Protocol for greenhouse gases.
Okay, that seems relatively straightforward. But then things get, well, trickier, don't they? When we move beyond just setting a limit and trading permits into this world of offsets, what's the key difference there?
Offsetting, yeah, that's where it gets complex. It refers to an action that's meant to compensate for environmental harm in one place by taking a supposedly equivalent action somewhere else, often at a different time, too.
Compensating elsewhere.
Exactly. So unlike a basic cap and trade where permits are issued based on the cap, in an offsetting scheme, the right to emit or cause some other harm is issued based on the logic that this damage will be compensated for. So a company emitting CO2 might pay someone else to, say, avoid deforestation or plant trees or build a renewable energy project somewhere else.
Okay.
But here's the fundamental paradox and what our sources really emphasize: the concept of additionality.
Additionality.
Yeah, it means you have to prove that the compensatory project, the tree planting, the avoided deforestation wouldn't have happened anyway without the offset money.
Ah, right. That sounds difficult.
It's notoriously difficult. How do you prove a negative? This often leads to what critics call phantom credits. Credits are issued, money changes hands, pollution continues, but there's no real new environmental benefit created.
So the compensation isn't actually additional.
Potentially not. Common carbon offset projects like building large hydro dams or setting up monoculture tree plantations often face these kinds of criticisms. And then there's the huge challenge of creating equivalent metrics, comparing, say, a ton of CO2 emitted here with avoided deforestation somewhere else, or worse, trying to find an equivalent for biodiversity loss. That's hugely controversial.
And our research mentions a whole range of these mechanisms, doesn't it? Things like REDD, reducing emissions from deforestation and forest degradation, and the Clean Development Mechanism, CDM, wetland banking, payments for ecosystem services, PES. And they often get these very positive-sounding labels now, like nature-based solutions or nature positive.
Indeed. The Clean Development Mechanism, the CDM under Kyoto, that was historically the largest carbon credit issuer globally, responsible for over half of all offsetting credits ever issued. Huge scale. And this market is projected to just keep growing. You've got new schemes under the Paris Agreement. China's launching its national ETS emissions trading system. And then there's the aviation sector's carbon offset market, CORE-CI, which started its pilot phase back in 2021.
So it's expanding into new sectors.
Definitely. And biodiversity offsetting is also expanding rapidly. You see extensive cooperation between big corporations, new environmental entrepreneurs setting up things like habitat banks, and even large, well-known conservation organizations like WWF getting involved in these market mechanisms.
So, okay, these markets are booming. Lots of financial interest. I think you mentioned Deutsche Bank calling carbon markets amongst the most promising emerging markets way back in 2009.
Yeah.
But the big question, is all this financial activity actually solving our environmental problems? Is it working?
That really is the critical question, isn't it? What are the real implications? And a key insight from the critics is this: when nature becomes just another financial asset, it doesn't just get a price tag. It becomes subject to the same speculative forces, the same potential for bubbles as any other commodity. Its financial value can become totally detached from its actual ecological health.
So the market logic doesn't necessarily match nature's logic.
Exactly. Critics argue that financializing nature often lacks genuine environmental effectiveness precisely for that reason. We've seen it with carbon prices fluctuating wildly, which then suddenly attracts renewed interest from banks and hedge funds looking for speculative opportunities, potentially creating financial bubbles built on, well, hot air or phantom credits.
It sounds like then that this promise of efficiency through markets can sometimes give way to a deeper issue, maybe a way of avoiding real change at the source. Is that a fair reading of the critiques?
I think that's very fair. Precisely. Instead of pushing for actual deep cuts in emissions or genuinely halting biodiversity loss where it's happening, we often see this reliance on net zero or neutrality goals. These can involve just, say, protecting an existing forest somewhere else to offset continued destruction.
So you're not actually creating new ecological value, just shuffling the deck.
Or worse, allowing the destruction to continue under the guise of compensation. And the focus can shift towards techno-fixes like geoengineering schemes. These carry immense risks themselves, and they can really deflect attention from the urgent, necessary work of cutting emissions right now.
And what about those green growth ideas?
Yeah, there are concerns there too. Even initiatives aiming for sustainability, if they still rely on destructive extraction of non-renewable resources, think cobalt, lithium, nickel for electric car batteries, are they truly solving the underlying problem or just shifting it?
Okay, so beyond the ecological balance sheet, what about the human side? How does this financialization impact communities, people, and their fundamental relationship with nature?
This is absolutely critical. Critics highlight that financialization can really damage, even destroy, the social, cultural, and spiritual bonds people have with nature. It redefines nature solely as capital, as a resource to be exploited or traded.
And you mentioned land grabbing.
Yes, serious concerns about land grabbing. Imagine a community that's lived for generations in a forest, their culture tied to it. Suddenly, that forest is designated a carbon sink for some distant corporation's offset project. Their traditional rights, their way of life, suddenly under threat. It's a stark illustration of the human cost. This is seen by many as a new form of enclosure, like the historical privatization of common lands.
So these projects carbon sinks, protected areas for offsets, they can actually displace people.
They absolutely can and often do displace indigenous peoples and local communities, undermining their rights, their cultures, their traditional livelihoods.
So it feels like instead of government stepping up to regulate and protect people and the planet, it's almost like corporations are taking over governance through these markets. And that brings up the issue of greenwashing, which we hear about a lot.
Exactly. You hit on a key point. The fundamental drive for profit, which is, let's be honest, the primary legal obligation of corporations, can directly contradict the need to respect planetary boundaries and ensure social justice. This inherent conflict creates fertile ground for greenwashing.
Where companies use this language of financialized nature.
Right. To present an environmentally friendly image while simultaneously maximizing profits from both their destructive activities and the supposed conservation initiatives meant to compensate for them. It's a win-win for them, potentially a lose-lose for the planet and people.
And voluntary approaches aren't enough.
Many argue they're absolutely insufficient. Voluntary disclosure, market self-regulation, the evidence suggests they don't really prevent greenwashing effectively. What seems more effective is strong government oversight, clear rules, and significant penalties for misleading claims. Even the EU's green bond standard, which is quite advanced, has faced criticism for not fully closing the loopholes.
It certainly paints a pretty concerning picture so far. Lots of risks, unintended consequences. But are there any, rays of hope? Are there alternatives being proposed, ways to move towards a genuinely sustainable financial system?
Yes, absolutely. It's not all bleak. There is a growing and I'd say increasingly urgent movement towards building a truly sustainable financial system. UNEP research actually talks about a quiet revolution that's underway.
A quiet revolution.
Yeah. They've documented over 100 policy measures being implemented in around 40 countries, specifically designed to integrate sustainability into financial markets, not just as an add-on. And this is driven by, growing global awareness, technological breakthroughs, but also sheer necessity. The urgent need to address environmental degradation is undeniable.
You have some figures on that?
Yeah, the data is stark. Natural capital, the actual stock of natural resources, is reportedly depleting in 116 out of 140 countries studied. And if current rates continue, we're looking at a further 10% reduction in global natural resources by 2030. The harm to humanity from that would be significant.
So what kinds of measures are part of this quiet revolution? What are countries actually doing?
It's a range of things. Strengthening national financial regulations to explicitly incorporate social and environmental risks, for example. Developing genuinely green financial instruments, things like green bonds, where the debt raised is specifically earmarked for environmentally sound projects. Or even green IPOs for sustainable companies.
So directing capital flow.
Exactly. Using fiscal incentives, tax breaks, subsidies to redirect private capital towards sustainable projects. There's also a growing recognition, legally and ethically, of the fiduciary duty for investors to consider environmental, social, and governance factors, ESG, as it's known.
ESG, yeah.
And you see countries like Brazil and China developing quite comprehensive green finance strategies. Some central banks, like in Bangladesh, are even starting to integrate sustainability into their core monetary policy thinking. That's quite radical.
So it seems there's a growing understanding that simply privatizing nature through markets isn't the answer, that we need something more systemic, more fundamental in finance itself.
Absolutely. The research really emphasizes the need to overcome the existing barriers, inertia, lack of data, misaligned incentives to fully integrate social and environmental factors into all financial decision-making. This means enhancing market practices, better disclosure, more sophisticated risk analysis that includes climate risk, for instance. It means leveraging public finance strategically to unlock private investment and encouraging deep cultural shifts within the financial industry itself.
Moving beyond business as usual.
Definitely. And crucially, it also means being willing to learn from alternative models, like those practiced by many indigenous peoples. They often prioritize collective well-being, a balanced, non-transactional relationship with all life. Think of the buen vivir or living well concept from South American indigenous cultures. It fundamentally challenges that Western individualistic, extractive view of nature that underpins so much of this financialization.
Well, it's about shifting the whole system, not just tweaking it with a few new green products.
That's the argument. Yes, a systemic shift.
Well, today we've certainly dug into the complex world of financializing nature. We've gone from its origins in the wider financial system to the specifics of things like carbon offsets and biodiversity banking. We've heard about this huge potential for both financial speculation on one side and maybe genuine attempts at solutions on the other.
The implications are truly profound, aren't they? Touching on environmental effectiveness, socioeconomic justice, and really our fundamental relationship with the natural world. And while those risks of green bubbles, speculation, and pervasive greenwashing are very real, there's also this growing quiet revolution trying to steer finance towards genuine sustainability through better regulation, real transparency, and maybe most importantly, a profound reevaluation of what we value.
So perhaps the next time you hear terms like natural capital or net zero being discussed in market terms, it's worth asking, is this truly an investment in nature's well-being? Or is it perhaps just a sophisticated new way to profit from it? And maybe the deeper question for all of us is, what role do we play as individuals, as a society, in demanding a financial system that genuinely supports a thriving planet for everyone?